Every day, millions of retail investors ask the same question. What's the next NVIDIA? And often end up buying the same stocks everyone else is already talking about. But that's not how Wall Street invests. The world's biggest hedge funds don't chase headlines. They chase opportunities long before they become headlines. Through SEC Form 13F filings, institutional investors managing more than $4 trillion are required to disclose many of their U.S. stock holdings. Think about that. Billions of dollars, hundreds of investment analysts, months of research, all summarized in one filing. So I spent hours going through the latest filings from some of the most respected investors on Wall Street. Bill Ackman, Pershing Square; Chase Coleman, Tiger Global; Seth Klarman, Baupost; Philippe Laffont, Coatue; Stephen Mandel, Lone Pine. And I wasn't looking for the biggest stocks. I was looking for a pattern. When I connected the dots, something surprised me. These billion-dollar investors aren't chasing AI hype. They're quietly buying the companies building the entire AI economy. And by the end of this video, I think you'll start looking at AI investing very differently. 1. Microsoft. Let's begin with a move that caught almost everyone off guard. Bill Ackman, one of the world's best-known activist investors. A man famous for making concentrated, high-conviction bets. He doesn't build multi-billion-dollar positions every quarter, but this time, he did. Pershing Square invested approximately $2.09 billion into Microsoft. Almost immediately, Microsoft became roughly 15% of the firm's disclosed portfolio. Now ask yourself, why would Ackman make Microsoft one of his largest positions after AI has already become the biggest investment story in the world? The answer: Microsoft isn't simply an AI company. It's becoming the operating system of enterprise artificial intelligence. Every Copilot subscription, every Azure AI deployment, every enterprise customer creates recurring cash flow. This wasn't momentum investing. This was a conviction bet on where enterprise AI is heading over the next decade. 2. Amazon. Most retail investors still see Amazon as an online retailer. Wall Street doesn't. Seth Klarman, one of the greatest value investors of our generation, increased Amazon by nearly 47%. It became Baupost's largest disclosed holding. Why? Because AWS has quietly become one of the world's largest AI infrastructure businesses. Then Amazon invested billions into Anthropic. Now think about that. Amazon isn't trying to win the AI race by itself. It's building the roads every AI company has to drive on. That's a completely different business model. And institutions understand that. 3. TSMC. Now let's move to perhaps the most important company on this entire list, Taiwan Semiconductor. Think about your favorite AI company: NVIDIA, AMD, Broadcom, Apple. They all design incredible chips. But here's the question: who actually builds them? TSMC. Without Taiwan Semiconductor, there are no Blackwell GPUs, no MI400 accelerators, no advanced AI processors. That's why Chase Coleman increased Tiger Global's position by nearly 49%, bringing it to more than $3 billion. He isn't betting on one AI winner. He's betting on every AI winner. 4. Lam Research. Here's where things become really interesting. Almost nobody on YouTube talks about Lam Research. Yet Philippe Laffont's Coatue management owns roughly $2.1 billion worth of the company. Why? Because before NVIDIA can manufacture a single AI chip, someone has to build the machines that manufacture those chips. That's Lam Research. Retail investors buy NVIDIA. Institutional investors buy the companies enabling NVIDIA. That's a completely different way of thinking. 5. GE Vernova. Now let's leave semiconductors for a moment. Because AI has another problem: electricity. Lots of it. Every new AI data center consumes enormous amounts of power. Some estimates suggest electricity demand from AI data centers will continue rising rapidly over the coming years. So, where is Wall Street investing? GE Vernova. Coatue owns roughly $2.25 billion. Not because GE Vernova builds AI, because it builds the infrastructure AI cannot live without. 6. Applied Materials. Applied Materials tells the exact same story. Tiger Global increased its position by roughly 85%. Why? Every semiconductor manufacturer needs applied materials equipment. No equipment, no factories, no AI chips. Again, Wall Street is buying infrastructure. 7. Vistra. Finally, the stock almost nobody expected. Vistra. Stephen Mandel's Lone Pine Capital has been increasing exposure to electricity providers like Vistra and Talon. Because AI doesn't just consume computing power, it consumes electricity. This isn't an AI software investment, it's an AI power investment. And that may become one of the biggest investment themes of this decade. The moment everything clicks. After reviewing all 7 companies, I realized something. None of these investors were chasing hype. Instead, they were quietly building positions across the entire AI supply chain: cloud, semiconductors, manufacturing equipment, power generation, electricity, infrastructure. That's where institutional money is flowing. Not into yesterday's headlines, into tomorrow's necessities. My number 1 pick. If I had to choose just one company from this list, it's Taiwan Semiconductor. Not because it's the most exciting, because it's the most essential. Nearly every major AI company depends on TSMC's manufacturing. NVIDIA designs, AMD designs, Broadcom designs, Apple designs. TSMC builds. That's a competitive advantage almost impossible to replicate. To me, owning TSMC is like owning the factory behind the AI revolution. My hidden gem. If you're looking beyond the obvious, watch GE Vernova. Because while retail investors debate AI chatbots, Wall Street is quietly investing in electricity. Every AI model, every data center, every GPU cluster needs reliable power. GE Vernova helps provide that infrastructure. Sometimes, the biggest winners aren't the companies making headlines. They're the companies making the headlines possible. And if you're serious about new stock market investment opportunity, subscribe to Stock Market Analyst, because every week I break down investment opportunities before they become mainstream. Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.